And our currency of the week is dollar CAD, the North American pair. We're going to focus on three factors that move the currency. It's oil prices, clearly, especially when we're recording the show today on November 30th, but that's the immediate mover. Canadian domestic figures and the dollar Trump rally, the US dollar, not the Canadian one. So let's start with Canadian crude oil prices. So if you're watching the show today, not the recorded segment, there's a 50-50% reach a deal. If you're seeing it afterwards, you know the result. WTI hugs the 45 level, which is more or less in the middle of the range of 39.52. The Canadian dollar seems relatively vulnerable. What does it, when I say vulnerable, what does it mean? It's the Canadian dollar is rising just a bit when oil prices rise, and it falls much more when oil prices fall. That means it's showing weakness. And markets are looking for reasons to sell the Canadian dollar and doing it a favor by buying it when oil prices are rising. I believe this will continue for quite some time. Okay, that's something to watch out for. And another thing here to mention is we need a break of this range to see a big impact on the pair. Okay, we would need a total failure of OPEC today, a big breakup. Good morning, Ramon. To see in Canadian dollar really collapse, or we would need a great deal today and to see it, or rising oil prices in general to see it, the Canadian dollar advancing. Again, the currency is more vulnerable to the downside if oil prices fall, but it's the immediate mover of the Canadian dollar. But in the longer term, I think oil will have less of an impact. In addition, if oil prices remain lower for longer, it's important to remember that Canadian oil is expensive. Okay, Canada extracts its oil from tar sands in Alberta and the north of Canada. It's more expensive than Middle Eastern oil. It's more expensive than oil coming from Texas. Probably as expensive as oil coming from the Dakotas. Probably, well, anyway, if the world moves to more renewable energy and oil prices remain low, we'll still continue using oil, but this kind of oil will probably not be prominently the type of oil that Canada extracts, the more expensive oil to extract from tar sands. Canada needs high oil prices. So that's regarding oil. So oil is the immediate mover, but not for the longer term. Domestic data. This is Prime Minister Justin Trudeau. The recent jobs report was great. There's another one coming up just this Friday. Canada is trying to move away from oil to other things. Prime Minister is already 1 year in power, and he introduced some kind of fiscal stimulus, not on a very, very large scale, but previous governments saved money when oil prices were high, and these are good times. I mean, this is a good opportunity to spend this money. GDP, because of oil, has been a bit bumpy, and there are worries about real estate in Vancouver, where the British Columbia government announced some curbs on real estate, and also in Toronto. So watch out for that. We didn't have a bust there yet. Retail sales are a bit weak, and this is also something to watch out for. I believe that domestic data in Canada will have a bigger role on dollar CAD. And the third factor is the Trump rally. So to remind everybody, US dollar rallied because markets expect Trump and with full control of government, of Republican Congress, to add fiscal stimulus, cut taxes, and spend a lot on basically everything, infrastructure, Medicaid, wars, whatever. That means stronger dollar, higher inflation, higher interest rates. In theory, if this really pans out, it's also good for Canada. That means it'll be good for the Canadian dollar because Canada, apart from oil, depends on a lot of demand from the United States. They're big countries, big neighbors, very long border. So it should be good for Canada. We will really know what's going on with Trump, not now, probably only after the inauguration on January 20th, and maybe we should give Trump, as we should give any president, the 100 days of grace. So I believe that by the end of April, we will know what Trump really did and what he didn't do. I believe markets are getting a bit ahead of themselves, believing him literally. Specifically, Trump says many contradictory things, and we should take any politician with a big grain of salt. But the more stimulus in the US, the better it is for Canada. So I believe that we'll see the big impact late in January and in February, March, and April to see how much the Canadian dollar moves because of US politics. Okay. My bias is for the downside for CAD. That means upside for dollar CAD. It's not a one-way street. Why do I have this bias? First of all, oil prices, I believe, will continue being pressured to the downside. And as I said, Canadian oil is expensive to extract. And I think that Trump will not fulfill his promises. We'll have less demand for Canadian goods coming from the United States. So I think there's more pressure to the downside than to the upside, despite the Canadian government's efforts to stimulate the economy. Doesn't mean Canada is a bad place to be. It's still one of the best places in the world. Just the Canadian dollar, I think, has less room to the upside. Let's now look at the, and as we speak, of course, we were seeing oil prices jump up today. So just take a quick look at that. Maybe there's been a rumor about a deal. Looks like that. So again, a deal is good for the Canadian dollar. Not fully priced in. And let's see if we already have an impact on the Canadian dollar. Yes, we do. Again, if you look at the charts, you see bigger move in crude in comparison to the reaction in the Canadian dollar. Again, the Canadian dollar showing weakness, rising, but not so much when oil prices rise and falling much more. But for this segment, let's look at the bigger picture for the Canadian dollar. Again, lines to watch here are 133.80, 132.65, 130. If we look even lower, if we have a huge oil rally and a consequent rally in dollar CAD, 128.30 is another line to the downside. To the upside, we have 135.40, 136, 136.40, and even much higher, of course, 140. If we have a total collapse of the loonie, 143.25, and that was early in the year when oil prices were really rock bottom levels. The dollar CAD almost reached 147. Okay, as we speak, I see that things are looking better for oil and for the Canadian. Okay, so that completes our segment on dollar CAD.